best time to invest in the stock market to build your wealth for your future is right now. If you want to know how to find out, then watch this video all the way to the end. The best investment anybody can do at this moment in this recession is to become more aggressive and buy stocks at lower prices when stocks have completely fallen. When you hold these assets, they will potentially give you higher returns and grow your portfolio in the future. There is a saying by the experts: you have to buy low and sell high, but people don't take advantage of this practice enough due to FOMO, or fear of missing out, and panic selling. This is the time to buy low and sell high later. Investors who buy stocks or cryptocurrencies at lower prices now, they are increasing their future wealth, and they are well positioned to continue thriving in the markets for 5 to 20 years to come later. Therefore, decline in the stock market means your future gains will be higher in the long run to generate wealth. Who wouldn't want that? I think everybody wants to be rich, wealthy, and retire with a lot of money in the bank. But not everybody is going to take the time to put in the work and work hard right now in preparation for the future or their retirement. This is the moment to keep stacking up your money and buy the debt to score higher returns in the future. This is a raining season. It's time to plant the seeds now and harvest later. You cannot harvest during the planting season. If you don't plant seeds, you cannot harvest the fruits, because there will be no trees and plants to produce fruits for you to harvest. You got the idea, right? Investors who benefit the most become wealthy from the stock market during a recession are the investors that avoid panic selling, because this is the key to long-term success in investing. A great way to avoid panic selling in a recession is to diversify your portfolio to help prevent serious losses. And you do this by investing in index funds and ETFs, because they are less volatile in the stock market. They are safer for long-term investment. Index funds to invest in during this market crash is the Vanguard index funds like S&P 500, VOO, VTI, VYM, VOOG, VEA, VNQI, and there are many more, as well as other ETFs that you can invest in to hold your money longer due to volatility. And if you invest in right now that you have stocks that are unstable, that are losing a lot of money, another way you can take those stocks, pretty much you have to sell them, and then you take the money and then put into the index funds like Vanguard, like those lists that I just mentioned. This is not financial advice, by the way. This is for educational purposes and entertainment. So therefore, you must do your own research thoroughly and determine if the stock market is the right place for you to invest in, because stock market is very volatile. As you can see, there is a recession going on. The stock market keeps crashing, as well as cryptocurrency market also keeps crashing. So therefore, it's very risky to invest whether in the stock market or in cryptocurrency. You can gain more money very fast, and you can also lose money very fast. So you do your homework before investing in the stock market. So speak to your financial advisor, and if the options are right, you go through them. Stock market is at a discount right now. So if you have cash sitting around in your savings account doing nothing, you have to act now and take advantage of the recession to buy stocks at a discount and hold for the long term. And when you hold for the long term, when the market rebounds later, your portfolio grows bigger, and now you sit on cash even more. We all can learn from Warren Buffett and benefit from the stock market during a recession by learning to invest like him using the method of value investing. Value investing is a type of investing that refers to buying stocks that are trading less than their book value. This means Simply, you have to buy stocks and cryptocurrencies at their lowest prices. When everybody is selling, the prices dropping low, you buy them cheaper. That's value investing, so that when the prices go up later, you sell high. There is a great quote from Warren Buffett, and Warren Buffett said the basic idea of investing are to look at stocks as businesses. Use the market fluctuations to your advantage and seek a margin of safety. 100 years from now, they will still be the cornerstone of investing. And then there's another famous quote from Warren Buffett saying that be fearful when others are greedy and greedy when others are fearful. So this quote resonates very well with the stock market and is a great quote to always look at it and think of it and take it into another perspective as an investor. So the simple meaning of this quote, when he said, be fearful when others are greedy, meaning when all the stocks are rising up, everybody is having FOMO or fear of missing out, and they all jump in and all buying stocks or cryptocurrency at higher prices, and it keeps climbing higher and higher and higher, and everybody is buying it at higher prices. Other people don't understand. So when that happens, you have to be fearful and you sit back. You don't do nothing. Study the market, study the activity, and relax. And the next quote, he said, greedy when others are fearful, meaning when the stock market is crashing, everybody is having a panic selling, and they're all selling stuff, and the market keep crashing. Stock prices, cryptocurrencies are going lower and lower, and everything is cheap. As an experienced investor with this knowledge, you stack your money, you go in and you buy the debt. You buy all the stocks, cryptocurrencies at lower prices, and you hold for the long term, like I mentioned before, so that when everything goes up later or the stock market rebound, you are sitting on a plenty of wealth, right? Whether you want to sell it or you want to hold longer, that's up to you. And then there's another investor, goes by the name Richard Harrington, who is the founder of RH Group. He agrees with these quotes from Warren Buffett, and he said it's easier said than done, but every single crisis is an opportunity. My top secret on how to profit during a recession is this: know that markets always bounce back. And he continues to say the secret is in the knowledge that the markets always bounce back. It happened after the 2008 global financial crisis, when S&P 500 dropped by 37% in 2008. The very next year, the S&P 500 returned by 26.46%. And 3.5 years later, I became financially free. So you see that, right? Wouldn't all of us want to be financially free within the next 3 to 5 years or 10 years from now? If we all take advantage and invest at the low stock market prices right now and hold for the long term, we all could benefit. I know everybody don't have as much money as him to buy large amounts that probably within 2-3 years you can financially free, but if you are committed, you can be able to buy the dip, come up with a good enough amount of money, could be 5,000, could be 2,000, 3,000, and buy every time there is a crash, and you keep your money, and the next crash you keep buying the stocks at a lower price, and eventually when everything bounces back and the economy is stable, you'll be able to have higher gains and returns on your investment. And that's what Richard Harrington did in 2008 crisis and made him financially free. And I think we all can learn from all these great investors to learn to invest like them and become rich and financially free as well. One of the great techniques to use to accumulate wealth while spending less money is to use the dollar cost average method to take advantage of the decline stock market. You do this by buying stocks and cryptocurrency as the prices are falling little by little. For example, if a stock costs $100 per share and you cannot afford to buy that stock at $100 per share because it's too expensive, right? So what do? You wait for that stock price to drop down to $60 per share. And now that's a good time for you to come in and buy. You buy it at $60. Buy one, or however you want to buy. If you have more money, you can buy more money, and you wait for the price to drop again. So the price dropped again from $60 to $55, and then you buy again at $55, and then wait. And if the price drops again to $40, then you buy more at $40, and then wait again. And if the price drops more to $30, you buy more. And if the price keeps dropping more to eventually $20, $10 or $5, you stack up. And one day when the stock market is going back up, you generate more wealth. And that's what they call dollar cost average. And using this method and doing this reduces your overall cost basis in share prices. You would save a lot of money using the dollar cost average instead of buying stocks at $100 per share. And there are some stocks that cost more than $100 per share. There are some that cost $200. Some cost $300, some that cost $2,000 or $3,000 per share. And even there is this Warren Buffett company, Berkshire Hathaway, that it costs over $400,000 per share for one stock. Can you imagine that, right? So if you are investing in such kind of company, you don't go in all to buy everything. You just wait and buy the debt by using the dollar cost average. They also call it DCA. Holding stocks during a recession is good when you invest in stocks that are from well-established companies that have large cap strong with cash flow and balances. And they must pay dividends because these stocks can survive economic downturns. Why invest in dividend stocks? Dividend stocks provide you with a return cushion even when stock market prices fall, and you gain profit on your investment. This is the reason why dividend investment stocks outperform non-dividend stocks during market crash. Also, if you are a real estate investor, buying cheaper houses during a recession crash is a good option. So by the time the economy rises, your real estate is worth more of a value. The advantages of investing in real estate during a recession is because you will get better and lower mortgage rates. You can lock up your lower mortgage rates for many years to come later. When rates rise later, you are good. It does not affect you because you still have the below market mortgage rates. An important take-home message is to avoid short-term investment losses because it will hurt your long-term investment profits. Therefore, stay invested in long-term investments to accumulate wealth. And over time, your wealth will grow larger and larger.